From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston, and welcome to Balance of Power, where the world of politics meets the world of business. On the brief today, Kevin Cirilli from the White House on President Trump's meeting with Fed Chair Jay Powell, Damian Sassower on the continuing civil unrest in Hong Kong, and from London, Jess Schenkelman on the British election in full swing. So, Kevin, we were rocked this morning when we heard that actually President Trump's talking to Jay Powell, including about negative interest rates.
Exactly, precisely. And in fact, the Federal Reserve putting out a statement virtually in real time upon this previously unreported meeting. What we know is that Fed Chair Powell was asked by President Trump to come to the White House, and that U.S. Treasury Secretary Steven Mnuchin also attended this meeting. According to a statement from the Board of Governors of the Federal Reserve, they say, quote, Chair Powell's comments were consistent with his remarks at his congressional hearings last week. He did not discuss his expectations for monetary policy, except to stress that the path of policy will depend entirely on incoming information that bears on the outlook of the economy. They also just so again, the Fed chair in this regard, just very much keeping with his public comments from last week.
Okay, so you're the expert in the White House. Square this for me, because I don't understand. On the one hand, Jay Powell says what he said to the Congress. On the other hand, where the president tweeting out, he had a very good and cordial meeting at the White House with Jay Powell. Everything was discussed, including interest rates, negative interest, low inflation, easing. How could it have been a good and cordial meeting when the president basically says he hates everything Jay Powell has to say on those subjects?
Precisely, and you saw this in terms of the rhetorical approach that Chair Powell has taken over the previous weeks and President Trump. I mean, remember, it was in a less than 24-hour window where you saw this illustration where President Trump, speaking at the Economic Club of New York, criticized Chair Powell, and then less than 24 hours later, the Fed chairman testifying in a consistent tone, an apolitical tone, before members of Congress. So, you know, you could, what you're hearing based upon the dueling statements is the Fed chair continued to strike that consistent Fed chair tone that we've all come to expect from the central bank, and President Trump continued to raise his concerns as it relates that he has done as well.
Okay, it's a fascinating story.
To be a fly on the wall.
yeah, to be exactly. Wouldn't you love to be that? Exactly right. That's Kevin Cirilli at the White House. Very close to that wall he could be the fly on. Yeah. Now we're going to turn to Damian Sassower of Bloomberg Intelligence. We want to talk to you about Hong Kong, but first, what was the market reaction to what we just talked about?
Well, the dollar initially declined off the back of it, right? I mean, anytime you're talking about negative yields in this environment, it means three things, right? It means that there's going to be a reach for yield on the part of investors because yields are so low. It means they're going to have to save more. Why? Because we're stealing future returns and bringing them to the current, so they're not going to have perhaps as much funds at retirement. And finally, it means you have to lower your return expectations going forward. Now, good luck with Chair Powell trying to explain all these things to President Trump. Hopefully he had some success there. But from where I sit, you know, this means that to take directional risk in this environment becomes that much more challenging. And so we would probably advocate taking a relative value approach, leaning into dislocations in the market, such as we're seeing pretty much across all asset classes, as opposed to really just going outright and saying this is the time we want to be selling or buying equities.
Okay, that's a great advice for U.S. investors. What about for Hong Kong investors? Let's turn to that, because, boy, that is a mess, and it's not getting any better.
No, yeah. I mean, look, tourism's off 26% year over year in the third quarter. I mean, unemployment has breached through that 3% threshold. I think we're at 3.1% unemployment now in Hong Kong. I mean, the real economy is really suffering. And look, you know, if you just look at the People's Daily, there's no room for compromise in China, according to Beijing. You know, and if you just look at some of the other, like the Global Times, it's basically, you know, they were advocating that the police use live rounds if they're being, you know, pushed back. I mean, there's just some real hard lines being drawn in the sand by Beijing, and that creates some concerns if you just look at the Chinese kind of troop movements and some of the barricades over the weekend that, you know, troops are basically removing these barricades. It kind of led to this heightened tension that, yes, there may be a direct intervention by Beijing.
Yeah, every day we have to cover that story in Hong Kong. Thank you so much to Damian Sassower. And now we want to go over to Jess Schenkelman in London, because the election over there is in full force. And we heard actually from Jeremy Corbyn, among other things today. And one of the things he addressed was how he thinks he could close the gap with the Tories. This is what he said in part.
What we're offering this country is to negotiate a trade deal with the European Union, which gives a credible leave option alongside Remain, and put that to a referendum. We've got to bring people together wherever they voted in the referendum. But above all, it's about empowering young people for the future with better training, with apprenticeships, and an equal status between apprenticeships and academic education.
So, Jess, give us a sense. How far behind is Jeremy Corbyn and his Labour Party, and is that going to catch him up?
Well, Boris Johnson opened up a significant lead over the weekend, and crucially, he said that all the candidates that are running for election under a Tory government have said that they would vote for his Brexit deal if he was elected. That saw the pound go up because that offers. He's saying he can offer certainty. He's going to get Brexit done. That's his promise. Today we had the CBI annual meeting, which is the big business lobby group in the UK, and all three of the main parties were trying to pitch themselves as the party of business. So Jeremy Corbyn was defending his decision to renationalise some of the major utilities, as well as the announcement last week that he would nationalise broadband as well.
So, Jess, in the meantime, as I understand it, the Prime Minister, Boris Johnson, went in front of the CBI to the business community and basically said, you know that tax cut I was going to give you? We're not going to give it to you quite as quick. How did that go over?
Well, traditionally, the Tories have been the party of business, but I'm sure you remember Boris Johnson when he was Foreign Secretary. Famously, he reportedly said, F business, which isn't really the party of business. And today he said he wasn't going to increase, he was going to cancel that corporation tax cut. Some analysis I've seen have suggested that it's not quite as significant as he's made it out to be, but that isn't often the way with politicians anyway. But his real point was that money that he's going to save, the £6 billion, he will use to put towards the NHS, which has become a key issue in this election, particularly during the winter when the NHS is under so much pressure.
Yeah, the NHS being the National Health Service. Thank you so much to Jess Shankelman over in London. And now it's time to get a check on how markets reacted to today's top stories. Joining us now is Abigail Doolittle. And looking at it right now, it doesn't look like there's a lot of reaction one way or the other.
You're absolutely right about that, David. We're right there on the even line. But amazingly, we do actually have record highs for both the Dow and the S&P 500, even though the gains are just fractional. And I think that has to do with that meeting that you were talking about with Kevin Cirilli between President Trump and Fed Chair Jay Powell. Wouldn't we love to be a fly on that wall to see what was really happening there? But investors seem to be somewhat encouraged there. We saw a small leg higher at the lows. The S&P 500 down 0.3%. That on the possibility of some trade whipsaws, the negative whipsaws. But it's a day-to-day narrative around trade. But right now, again, record highs, even though there's not a lot going on.
Abigail, you are such a good interpreter of the markets. Explain how the markets would interpret that meeting and the reports of it. I mean, what would they find encouraging? That they're meeting at all, that they're being civil to one another? What is encouraging there?
Well, you know, that's a great question. I think it is probably the fact that President Trump, who has not been so kind to Fed Chair Jay Powell on Twitter for a long period of time, a contentious relationship there, at least from President Trump's side, the fact that he's inviting Fed Chair Jay Powell in uninvited, that would seem as perhaps somewhat friendly, some sort of an olive branch. And then there was a headline that crossed the Bloomberg about the discussion of negative rates. So investors might like the idea that if rates are going to stay lower for longer, that could really help out the stock market, the economy, be sort of a friendly, liquid environment. Now, Fed Chair Jay Powell sticking with the party line, so not a lot changed there, but I think just the possibility. But again, very, very small moves. Investors are reaching for anything. There's a sense that we're just going to continue to see this slow drift up through the end of the year. Earnings season less bad. Perhaps we'll get something good around trade. Stay tuned.
When it comes to the president, Jay Powell, maybe no news is good news.
You're probably right about that. That is probably
nothing
great
bad
news.
happened, so that's just fine. Okay, many thanks to Abigail Doolittle for that report on the marketplace. Okay, coming up, 55 years after its debut, the Ford Mustang is getting a second look. We talk with Ford Automotive President Joe Hendricks about adding a crossover electric vehicle to the lineup. That's next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and on radio. We have a very special guest now. He is Joe Hendricks. He is president of Automotive for Ford Motor Company, and he has a big announcement that was made last night actually out in Los Angeles. So, Joe, welcome. Tell us about this new Mustang, the Mustang Mach-E.
Yes, a battery electric SUV, the first expansion of the Mustang brand into the portfolio in 55 years. Of course, we're going to still keep making those wonderful sports cars everyone knows and loves, but it's a 300-mile range battery electric SUV. Mustang's cues difference in the design. You can see it there. And also really exciting, a new technology, the GT version, 0 to 60 in 3.5 seconds, all kinds of over-the-air updates, all kinds of technology in the vehicle. We're really excited about expanding the Mustang brand.
Well, first of all, let's start with when can one buy it? I mean, when is it
It's going to come out in the fall of 2020, but we're actually taking online reservations right now, something new for Ford, $500 refundable deposit. You can go online, you can put your order in now, and we're going to build them in the sequence of the orders we get. So the first edition models are going to go fast.
Who's your target audience?
It's really a lot of different people. I mean, a lot of women like the Mustang, but they really need and want that utility vehicle. Over half the customers today buy utility vehicles in the U.S. So a lot of women are interested in that little higher seating and the 300-mile range and the utility of a BEV SUV. But importantly, really, anybody who loves the spirit of a Mustang. It's such an iconic Americana vehicle. Fast, fun, and affordable. And still fast and fun, but now with the electric propulsion.
So there has been a perception that Ford was maybe a little bit behind some other people in developing electric vehicles. Does this help you catch up? What do you need to do?
Yeah, we've been taking our time to make sure when we thought the time was right. And we're leaning into our iconic nameplates. We're going to have a battery electric F-150, like we've talked about recently. And of course, the Mustang extension of the brand here. We wanted to get the costs right. We wanted to wait for the customers were right and get actually the charging network right. We're part of the largest charging network in America, over 12,000 locations. So we want to get all that right. And this is going to be contribution margin positive. We're going to make money selling this vehicle. We think that's important too.
That's pretty amazing. We're talking with Ford Automotive President Joe Hendricks right now about the new Mustang, the Mach-E. You're going to be margin positive. I heard that. How are you going to pull that off? That's not typical.
Well, the Mustang really brings a lot to the table as far as, you know, the design cues and the aspiration of the vehicle. Having a 5-passenger SUV with that kind of range and that kind of performance is a big part of it. The cost base of the manufacturing location and the ability to showcase it and sell it all over the world gives us more volume. And battery costs have come down over the last several years, so we think the time is right now. Over the next several years, you're going to see that continue to be a better part of the proposition.
What is the price point? You mentioned that a couple times.
Yeah, so the vehicle starts about a little less than $44,000, but of course we have the federal tax incentive to offer to our customers as well. So that's a $7,500 tax credit. So if you're starting out a little less than $44,000, you're in the mid-30s when you're buying the base vehicle. The GT version, which is the high-end performance, is around $60,000. Again, available for that tax credit as well.
Where are you going to make them?
We're going to make them in Mexico, largely because a big portion of the volume is going to Europe. It's a big important part of our plan for Europe as well, and we can ship from Mexico to Europe duty-free. But also, we had available plant in Mexico because we stopped building the Fiesta sedan for the North American market as we've right-sized our portfolio, and then that plant could be converted over just to make battery electric vehicles.
We're talking with Joe Hendricks, who is the president of Automotive for Ford Motor Company. You talked about Europe. How much will be sold in the United States, and how much in China also? Because China has a big push on for electric vehicles.
No question that China is a big market for battery electric vehicles. Well, first here, we're going to build it here and ship it to Europe, and about the volume will be roughly half between the two markets as we start to grow the business. And we'll explore the opportunity of selling the vehicle and building the vehicle in China at a later date.
Tell us how this fits into the overall restructuring of the company that has been going on. We've heard about the $11 billion you're investing, some basic changes you're making in Europe as well as the United States. How does this fit into that plan?
Well, we've announced over $11 billion commitment to electrification. We have 40 products in development right now that have some form of electrification, battery electrics, plug-in hybrids, and hybrids. A number of our new vehicles we've launched recently, for example, the Explorer and the Escape, have hybrid versions. Actually, the Escape's going to have a plug-in hybrid version next year. So you're seeing that electrification be part of the portfolio. Of course, we'll keep having internal combustion engine vehicles as well. So we're rolling these out over the next several years. It's a big part of our portfolio expansion. But what's in the background here, what you're seeing is a movement away in North America from our sedans, historical sedans, many more SUV and truck offerings, but with electrification as a portfolio option, a propulsion option in that portfolio.
So you're the car guy. You know how to make cars on the plant floor. One of the things I've read is that with electric vehicles, you need fewer workers per vehicle. Is that true? Give us some sort of rough comparison.
It is true. So the final area, which is the final line, so you have the body shop and the paint shop, they're roughly the same. The final area, which is where most of the labor is, and all the floor space, about half the floor space requirements, about 30% less labor to build a battery electric vehicle compared to internal combustion engine, largely because of all that wiring, all the connections, all the fluids that go with the internal combustion engine. So you really really want to, if you can, you want to build the vehicle in its own plant so you can take advantage of that footprint size. Because if you build the vehicle alongside internal combustion engine vehicles, you don't get the benefit of taking care of all that floor space and freeing it up. What it does allow us to do is bring in motor assembly, for example, which are a very important part of electric vehicles, and do that in the plant as opposed to somewhere else, and really use that space efficiently.
How big is the market potentially for electric vehicles, such as the Mustang, the Mach-E? I mean, because right now, although there's a lot of talk about electric vehicles, it's actually a very small portion of the fleet.
It's about 3% of the sales are electrified in total in the U.S. last year, but we think that's really going to grow over the next 5 to 10 years, especially with all the products being offered in the next 5 years. So we think the timing's right for us. You know, we're going to continue to offer many different options for our customers, but we believe by the end of the next decade, by end of about 2030 timeframe, at least half of our vehicles will have some form of electrification that are being sold to the marketplace.
We're talking with Joe Hendricks, who's president of Automotive for Ford Motor. Tell us about the cost structure, and specifically now you have a new deal with the UAW,
right,
which basically was pattern bargaining off of what GM did. What is that going to do to the cost structure for you as you manufacture these vehicles?
Well, we're very proud of the relationship we have with UAW, and we were able to do that deal in 2.5 days without a work stoppage, and we got it ratified last week, as you noted, so we're proud of that. We have a great partnership with our workforce. I mean, we're all part of the same family, want to serve our customers in the same way. So the cost structure, you're right, the wages and benefits are largely equivalent to General Motors' deal. There are some differences in the UAW agreement with us. For example, the ratification bonus was lower by $2,000 for us, but a number of other operational things that were done to help us improve our business, because it's really important. As the largest producer of vehicles in America and the company that has the most UAW workers in America, because we build the most vehicles, the UAW worked very closely with us to make sure we can maintain that competitiveness, because over 80% of what we sell in the U.S., we build right here in the U.S.
It takes me back to the electric vehicles to some extent. Do you have the flexibility you need under this agreement to move as rapidly as you plan to move into electric vehicles?
We do. In fact, we announced as part of the agreement that we're going to add capability to build electric vehicles into our plant in Northeast Ohio in Avon Lake outside of Cleveland, add another line to be able to do that. So we're going to continue to invest in our capabilities. And of course, we've also announced we're going to build our battery electric F-150 in Dearborn, right at the Rouge site. So we'll keep investing there, and we have the flexibility to do that. And it's in everyone's interest to keep Ford competitive so that we can have a great business for the future.
We all focus on consumers, and particularly as we look at this Mustang Mach-E, we're thinking about consumers. But actually for Ford, commercial is terribly important. You've mentioned the F-150 electric several times. When can we expect to see that?
Well, we haven't given an exact date yet, but it won't be that long.
Yeah,
we could, but not today. How about that? We're going to come back.
Okay, do.
But you're right. We're very proud that we own work in America. I mean, most work segments, we have over half the volume of the vehicles sold in those segments with our F-Series trucks, our transit vans. And actually, we think commercial vehicles are a great application for electrification, because you can actually bring power to the work site, but you also can do other things with the vehicles. So you have a set charging point every night where the vehicle goes back to, those kinds of things. So you'll hear more about that. We have a Transit Tornado plug-in hybrid we're just launching in Europe as well. So another iteration of that product, and more to come from that. But we're proud of being the backbone of work in America and Britain and other places of the world, because it's really true to the testament of Built Ford Tough.
We're talking with Joe Hendricks, who's president of Automotive for Ford Motor. Give us some sense in North America of the breakdown for Ford between commercial and consumer.
So, about 30% of our volume is what we would call fleet in the U.S. That's largely commercial partners and also government. We do a little bit of daily rental, but most of it's commercial and government. And the commercial business is by far the biggest part of the business. So think about everybody from your local plumber who's a pipe fitter who might be buying a couple vans to a big fleet company like Amazon or Walmart, who have big fleets of vehicles. And we serve all those customers with our great products in the commercial vehicle business. So about 70% of our volume goes through our dealers, through the fleet, to the retail side of the business. About 30% is what we call fleet. Really important part of our portfolio. So
Joe Hendricks from Ford, I can't let you go without talking about the #1 movie over the weekend in the box office, which is Ford versus Ferrari. Quite a story, actually, going back to 1966 when Ford came from nowhere to beat Porsche.
And we beat Ferrari in 4 years in a row. So
beat Porsche as well.
Spoiler alert, we do win in the end. They can't change that in history. We're really proud of the history. It's such a great story. It gave us the GT40 and Carroll Shelby and the relationship with all those great people that still play out today. And speaking of Mustang, we're actually launching the Shelby GT500 this quarter, the new version of the Mustang in Carroll Shelby's legacy. And he was a big part of that. And of course, right, we won first, second, and third that year. We also won in 67, 68, 69. 1969, and then they kind of dropped the mic and said, okay, we've done what we need to do. We went back in 2016 with a new Ford GT for the first time, and we beat Ferrari again. I was there in person. It was awesome.
Wow.
So a lot of great history here. And it's a lot of great part of the heritage of Ford Motor Company, the family connections, the great vehicles, and of course, the history.
Pretty exciting, pretty exciting.
Yeah.
It's great to have you here, Joe. Thank you so much for being here. That is Ford Automotive President Joe Hendricks. Coming up tomorrow, I'm going to be speaking with SEC Chairman Jay Clayton from the SIFMA annual meeting in Washington. You can catch that interview tomorrow in the 12 o'clock Eastern hour. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Time now for the stock of the hour. Shares of Russian tech company Yandex are surging the most since July of 2017, up about 11%. This is after the company changed its governance structure to ease concerns from the Kremlin. Kaylee Lyons is here with more. So our resident Kremlinologist, why was the Kremlin concerned with Yandex?
Well, it is Russia's largest tech company. It started out as just a search engine. They've just expanded to taxis and food delivery service. It's a really large company, and 85% of the free float is in the U.S. And there was a lot of concern about foreign influence in this company, and a lot of concern about whether or not it was really in the state's interest to have that much interest. And about a month or so ago, we saw a lot of volatility in these shares because there was a proposal put forward, a draft legislation from Russia that would essentially cap foreign ownership at 20%. It was since revised to be 50% minus one share, but still a pretty sizable restriction. And it was dance between the Kremlin, the company, and investors. And so today, Yandex made some changes to their corporate governance structure. They're forming what they're calling a public interest foundation that will be independent. It's going to get a chunk of the voting shares. And then there was also a lot of concern about the CEO and what would happen to his shares in the event that he would die. He's only 55 years old, but it was still a concern. So they're now going to move his 48% of voting shares into a trust that will be in lockup for 2 years in the event of his untimely death. So interesting concern, but it was a concern on the part of the Kremlin, and the company is taking moves to ease those concerns.
So do I understand correctly that basically they went to a two share system? Basically, it's been under some suspicion back here in tech areas that we don't want to have two classes of shareholders. Actually, they wanted to have dual class.
Yeah, and they'll have the veto power, and they're going to oversee a lot of those sensitive issues like intellectual property transfer and the overseas sale of Russian users' data. So it's giving the Kremlin essentially a little bit more solid control here.
Is the user base all in Russia? As a practical matter? I mean, is
that's
that
a really good
it?
question. I mean, yes, it is a Russian tech company. It is the largest.
I'm going to say I'm not familiar with it.
Yeah, and that's the concern on the part of the Kremlin, is those Russian users' data being bought by overseas. It's all about that foreign influence here. So Russia's the big concern here. Now, I will say, since they announced this, the original author of the draft legislation has pulled it back, saying he's now going to take another look at it, and the Kremlin said that they've watched this very closely. They didn't interfere, but they are paying attention.
Fascinating story. Okay, thank you so much to Bloomberg Kaylee Lyons. Up next, President Trump goes down swinging for the second time in a row after going to bat for a Republican candidate for governor and comes up short. How much should the White House be worried? We're going to ask our panel about that next. This is Balance of Power, and we are on Bloomberg Television and on radio. From New York, this is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we're going to go now to Mark Crumpton.
David, British Prime Minister Boris Johnson's canceling a tax cut scheduled for businesses next year. Johnson wants the government to spend more on voters' priorities, including the state-funded National Health Service. The Prime Minister spoke to the Confederation of Business Industry. He's trying to get the focus on the election campaign on the Conservative Party's pro-business policies. Hong Kong has been transfixed by a two-day siege at a university. It's raised fears of a bloody crackdown on hundreds of protesters. They continue to be trapped on the campus, surrounded by police. Battles between the authorities and demonstrators included tear gas, gasoline bombs, and flaming vehicles. In China, health officials confirm a hunter who killed and ate a wild rabbit in the region has contracted bubonic plague. According to the Washington Post, 28 people who came in contact with the 55-year-old show no signs of the disease. However, the diagnosis comes as 2 cases of pneumonic plague have been confirmed in Beijing. Local health officials say the risk of spreading the disease is extremely low. Tomorrow, California kicks off a $2 billion bond sale that's part of a plan to fight homelessness. The state will provide permanent housing and assistance to those who are mentally ill. It's estimated that about a fourth of California's 130,000 homeless suffer from severe mental illness. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
If you want to defend your values, your jobs, and your freedom, then you need to replace radical, liberal John Bel Edwards with a true Louisiana patriot, Eddie Rispone.
You got to give me a big win, please, okay? Okay?
That was President Trump speaking in Louisiana last Thursday to rally support for Republican gubernatorial candidate Eddie Rispone. But the Bayou State did not give the president the big win he asked for. Democratic Governor John Bel Edwards was reelected by more than 40,000 votes, coming on the heels of Republican incumbent Matt Bevin's defeat, despite the president's backing. We welcome now our political panel of E. O'Brien Murray, founder of Red Barn Strategies, and Jeannie Zaino, political science professor at Iona College. So I think this ball is in your court. If I'm not why is this not a defeat for the president? He's had two in a row now where he's gone out and put his name on the line and said, I want these votes, and he didn't get it.
Because he wasn't on the ballot. That's what makes it so irrelevant. All politics is local. You can't beat somebody with nobody, and his name wasn't on the ballot. This president, and we've said on this show, and everyone in America said, is a different kind of president. Most presidents wouldn't have had the guts to go out and try to fight this and turn any of these tides around. Historically, the black vote in a Louisiana runoff is strong. It was strong again. This is what happens regularly in the Louisiana runoffs. It's nothing new. And in Kentucky, the Republicans down ballot won. How does that happen and you blame the president? It doesn't make sense. It's an irrelevant thing. You got to look at what happens in the general election for the president and see, by the way, what Democrat is going to run against this president anyway.
So, Jeannie, you agree with that, I assume?
Sure, I always agree. No, listen, the president said himself, you just played the clip. He went there 3 times. This mattered to him. He was sent in there. And to me, I think the president really misspoke several times, not just saying that I need this win, but trying to define John Bel Edwards as a progressive liberal socialist. This seems to be the only way he can see Democrats, and Edwards is anything but a socialist, progressive, liberal Democrat. He's a Democrat for sure. So to me, I think the president was ill-advised to go there, to say the things he said about how important it was to him, and then to try to paint somebody as a liberal when people on the ground know that that's not who John Bel Edwards is.
That's the point. He wasn't a liberal.
You agree the president committed malpractice.
No, I
didn't
agree with that part. I said he does things differently, so forth. But the opponent wasn't the liberal he tried to paint him as. But guess what? This Democratic field is. The only person right now that's in there so far is Joe Biden. It's not Buttigieg. And by the way, the man, the Bloomberg campaign, if he runs, is also the same thing. It's not going. That's why there's an opening. There's a reason why Buttigieg is ahead in the polls in Iowa, and that the Louisiana governor won re-election. None of this is a shocker.
Okay, let's turn to the Democrats, Jeannie. Obviously, Obie really wants to talk about Democrats a lot. Let's talk about it. What's going on in Iowa? Actually, there's a poll out over the weekend actually showing Pete Buttigieg, the mayor, has taken over #1, at least in the polling.
He has in the polling, and he has done a fabulous job. Organization matters in Iowa. He has done that. He is a moderate guy. He's got a lot to offer. I think he's a strong candidate. But if I was an Amy Klobuchar or if I was some of these other people, I would not be that concerned. He may be peaking a little too early. And let me just address what Obie just said. You've got progressives in the race. You've got Elizabeth Warren. You've got Bernie Sanders. They're doing well. But Pete Buttigieg, Joe Biden, Amy Klobuchar, who I think deserves a lot of consideration, now Deval Patrick, potentially Mike Bloomberg, these are not socialists. These are not progressives. These are not left-wingers for the party. The party is trying to figure out who it is, and I think we should have that discussion.
Warren rolls out Medicare for all. Next thing you know, Mike Bloomberg says he might run. He gets 2% without even being a candidate yet, and Buttigieg jumps up on top. That just shows the Democratic field is all askew at this point, and they go too far left. They got to come back around to the center and try to beat the president, and they can't beat the president.
So if people are dissatisfied with the Democratic field, who's dissatisfied? Because the polling indicates, if you talk to Democrats overall, 75-80% say they're satisfied with the field.
They're satisfied.
So is it the populace? Is it the voters, or is it the power elite in the Democratic Party.
No, I think simply put, the New York Times had a story about this a month ago before there was talk about who else might get in this race, including Patrick at this point. The reality is they're happy with who they have until somebody else shows up. And then there's a new shiny object that goes, wait, this person might be able to beat the president. They're going to run out of money. The Bloomberg campaign is about Super Tuesday. Super Tuesday, 105 days away. I keep this kind of stuff measured instead of birthdays and family stuff. I count these days. It's kind of pathetic. 105 days. He will run a national campaign. Nobody else can compete with that. He's up at 2%. He breaks 10%. See what happens next. At the end of the day, that's going to show you what's going to happen in the Democratic primary. It's all going askew. It's going to continue.
So, Jeannie, I keep coming back to the same subject. No matter who is running and what their platform is, provided we have unemployment down below 4% and we've got inflation at 2% or low, can anyone beat President Trump as a practical matter? Because it is a bread and butter election. It is. And an incumbent president in a good economy, 80% chance of being reelected. This is going to be a hard fight for Democrats regardless. And yet they do. There is a lot of energy, which is why you're seeing Democrats in the southern red states that elected him by 30 points are going Democratic because they are dissatisfied with some of the behavior of this president. Certainly the impeachment we're watching this week shows that. Obie, as a Republican, are you at all concerned about voter turnout numbers? In this sense, the midterm election had like record levels for because people are really agitated, either on the left or the right. They're getting out to vote. Sure. And particularly, we had somebody on who studied this, who said basically the college-age students were disproportionately coming out to vote. Are you at all concerned that actually President Trump may stir up a hornet's nest? He stirred it up before when he got elected. That's what set this thing off. They were talking impeachment the day he got elected. But Democrats were pretty complacent about Hillary Clinton. Why wouldn't they be? But that's the point. But that's what they should do. They were not motivated to come out. Well, no, but they were not as motivated as the Trump voter. We saw everything about it in any kind of surveys that were being done, not just the polling, but the other types of campaign activities you do in social media and the calls you make. But what happens then in this campaign at the end of the day is who shows up to vote, and nobody on the Democratic side is motivating that base again either, which keeps him in power. You know who's motivating the Democratic base is Donald Trump, and that continues to be the reality. And just back to the economy for a minute. There is a big question looking at the specials we've just seen, the election we just saw, as to whether, in fact, since 2016, elections are driven by the economy anymore in such a partisan environment. There's a lot of work to be done on that. I think it's a big question. But you're not going to be impeached by Twitter at the same time these voters, when they're making these decisions. When he's not on the ballot, it's a major issue, but at the end of the day, they're going to look at it. I've talked to many families across this country. When they hear what this president does, they may not love everything about it, but they look and see, wait, I don't like the other guy on the Democratic side. Okay, we'll come back and talk about impeachment another time. Okay, thanks to our political panel, E. O'Brien Murray and Jeannie Zaino. And a quick disclosure, Michael Bloomberg is the founder and majority owner of Bloomberg LP, the parent company of Bloomberg News. Bloomberg says he has not made a formal decision on whether he's going to run for president at this time. Coming up here, we talk with Stephen Rosenthal, senior fellow at the Urban Brookings Tax Policy Center. His thoughts on how FedEx got off the hook for its big tax bill. That's next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Democratic presidential candidates are embracing increased tax rates for the wealthy. But are the current rates really being enforced? One dramatic case that is working its way through the IRS indicates that maybe Renaissance Technology, that hugely successful hedge fund, actually may owe as much as $6.8 billion in back taxes. That's according to certain Senate investigators. Welcome now, Stephen Rosenthal. He's senior fellow at the Urban Brookings Tax Policy Center in Washington. So welcome, Stephen. Good to have you with us. I got my attention just because $6.8 billion is a pretty big tax bill. I guess the good news is you can't owe that much unless you made a lot more than that. But what are the sorts of efforts that places like Renaissance Technologies, whether it's proper or improper, what are they doing in order to avoid paying taxes?
Well, $6.8 billion is on the low side. With interest, it could be double that amount. And with penalties, another $1 billion. I helped the U.S. Senate go through Renaissance's financials and their tax reporting. And Renaissance aggressively used something known as derivatives to convert their short-term gains into long-term gains. Renaissance was making 100,000 trades a day, but they took a position that the payoff for their trades actually occurred much later, more than a year later, by virtue of some alchemy using financial derivatives.
Now, as I understand it, they're not the only company that does something like that, right? In order to, I guess, sort of arbitrage short versus long-term capital gains?
Right. We've had a lot of problems with the arbitrage of long-term versus short-term capital gains. The rate differential is now a little lower than it was for Renaissance, 17% rather than 20% during the period under audit. But look, the rich overwhelmingly earn the bulk of the capital gains, and those are preferenced items. They have a lot of opportunities to convert their profits into long-term capital gains and pay much lower taxes than, say, a salary owner.
Yeah, and we all know the tax law can be very, very complicated, but the wealthy do go to a lot of efforts to make sure they minimize their taxes. Can't blame them for that. We have Larry Summers, the former Treasury Secretary, also former president of Harvard, writing an op-ed today saying, in part, quote, "Our new analysis suggests that better focused audits, raising Internal Revenue Service enforcement to previous peak levels, investing in information technology, and broadening earnings reporting could raise more than $1 trillion in the next decade, primarily from very high-income taxpayers." Do those numbers make sense to you, Stephen?
Well, we know that the IRS has dwindled in its audit capacity. And we know there's a huge, huge tax gap, the difference between the amount that should be collected and that is collected by the IRS. Larry Summers says 70% of that gap is attributable to the upper 1% avoiding taxes. And of course, that's where the money is, and that's where we should be looking. But here's the thing. The rich will always have access to great lawyers and great resources to fight the IRS. The rich also earn their money oftentimes through partnerships and through business opportunities in which it's a lot harder for the IRS to find and collect the taxes due. But Larry Summers has a great point. He observes that for every audit hour devoted to the 5 million plus taxpayers, that's $5,000 that could be collected. We clearly need to put more money into collecting revenue and taxes owed by the highest income levels.
And one of the points made in that op-ed is, apart from putting more money into it, we're putting less money into it. We're auditing less, we're spending less money on audits. Why did that come about, and when did it come about?
I think there was a philosophical shift at the time the Republicans took Congress, 10, 15 years ago. They wanted the government out of our lives, and they cut dramatically the IRS budget. And then they conducted a series of audits demonizing the IRS for the so-called charitable, the exempt organizations situation, in which it was alleged that the IRS is going after conservative-leaning exempt organizations. And so they cut the budget even further, and they beat up the IRS even further. Not surprisingly, the IRS has really pulled back its horns on audit and has been a lot less aggressive. And so I think that accounts for a large amount of the decline. But I think there's now bipartisan agreement that the IRS needs more resources and the country needs more revenue that could be collected if the IRS had more resources.
To turn slightly, the tax cuts were given in part because the thought was that we would get more capital investment, and maybe some tax concessions were made in order to get that. There's a controversial piece out in the New York Times today about FedEx, basically saying that they made a deal with the government that they would do the capital investment. They didn't do it. They've avoided paying taxes. By the way, the head of FedEx has responded saying, I'm willing to debate the publisher of the New York Times about the fact that they didn't pay any taxes on their income either. What's the truth of the matter in terms of development of capital investment because of those tax cuts?
Well, look, both are right. The New York Times and Federal Express. Corporate America is not paying much in the way of taxes. And the Federal Express, when they lobbied very hard for President Trump's corporate tax cuts, which were the crown jewel of the tax reform measure that was enacted in 2017. But after that enactment, corporate tax rates plunged and investment did not go up. And so it's sort of ironic that Federal Express promised, in effect, when they were out there campaigning for the lower taxes, to invest more. We didn't see that happen. Now, I'm not sure if it's a great rebuttal to say, hey, New York Times, you as a corporation paid lower taxes also in the aftermath of the tax reform bill. But that seems to be the argument. You know, you also, nobody's paying more corporate taxes. Everybody got their taxes cut. I think that's what really happened here.
So, Stephen, finally, there was a time, and maybe it's just in memory, but there was a time when, in fact, we had a House Ways and Means Committee with very sophisticated, established staff that spent their careers there, who made a lot of decisions for what was best for the country in terms of raising revenue. There was always politics involved, but it wasn't intensely partisan. Is there that kind of expertise now up on the Hill to address these issues as a technical matter, to say, where would we invest our money smartest? For example, with the audits.
Well, look, the technical expertise dwindled some over the decades. However, the Congress has access to lots of good resources. When I worked for the Congress in the 90s, you're right, David, it really wasn't so partisan as regional. The Democrats and Republicans regionally often agreed and tried to work out differences. It really wasn't so much Democratic versus Republican. But in recent decades, the ideology of the Republicans have been to continue to cut taxes, and they've actually promised as a commitment to run that they're going to cut taxes. And the Democrats have shifted to the realization that they have to raise taxes to pay for all the expenditures we want to have. The odd thing is, in my judgment, the Republicans and the Democrats agree that we have lots of spending obligations. The Republicans merely want to borrow and spend, and the Democrats want to tax and spend. That's where we are today.
That's where we are today. Okay, thank you so much, Stephen. That was really helpful. That's Stephen Rosenthal. He's with the Urban Brookings Tax Policy Center down in Washington. Coming up, President Trump's vaping ban may have been a bunch of hot air. Why the president is poised to backtrack on the administration's vaping crackdown. That's coming up next. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The Trump administration's plan to crack down on vaping has stalled. President Trump is coming under pressure from the industry and conservative activists, making him reconsider the proposed ban on nearly all flavored products. Let's bring in now Bloomberg's Josh Wingrove from the White House. So, Josh, thank you so much for joining us. But this is a news organization, so we have to follow the news. We just got a headline, as you know, that just crossed, and it says that the High Court, the Supreme Court now apparently has stayed a House subpoena for Trump records. As we know, the House of Representatives had subpoenaed tax records from President Trump, saying they needed to look into things like the emoluments clause. That was wending its way through the courts. Thus far, they'd been told they has to produce them, but apparently there is a stay. How important could this be?
Well, this has been, as you know, a long-running fight, one of sort of several fronts that Donald Trump is fighting on vis-a-vis his financial records in one way or another. So this is probably, good news for him, but this is something that he's just fought from day one. And of course, that has fueled questions as to why he's fighting it. And I think that there will be continued demands and legal challenges and whatnot to try to get these records. But for now, as you say, breaking news, we'll have to see how it plays out. But I think, this is Trump has shown no willingness since day one to release anything from, with regards to his financial records. And, we kind of stopped talking about it. That is broken custom previously from other presidents.
Yeah, and it bears repeating, the Supreme Court staying something does not necessarily indicate how it will rule ultimately. In the meantime, let's go back to this vaping question, because we saw the president, we saw Alex Azar, his head of HHS, go out and say, we're really going to be tough on vaping. We're really going to take this serious as a real epidemic on teenagers. Now the reports they're backing off. Why?
Yeah, they punted essentially 3 times, once in September, once a couple of weeks ago, and once last week. And the issue here is the balance between what Trump sees as a jobs issue, shutting down vape shops and, angering all the people that own them, shop at them, work in them. And on the other side, this spate of illnesses and deaths, particularly among minors who are using vaping products of some kind. And so Trump is trying to find some sort of sweet spot here. The problem is that either side says there is no sweet spot. Vape shop owners say any substantial crackdown would be very bad for their business and that Trump would pay a price politically. Health organizations say that anything other than a wide-ranging flavor ban will allow kids still to get their hands on this stuff. So he's really trying to find a sweet spot here. It's not clear that there is one, and it's not clear when he's going to come up with a final decision.
And there is an FDA rulemaking going on, as I recall, and I think in newness and common rulemaking, you can't take into account things like how your base would respond.
Yeah, but the White House has more or less sucked that process up. They had canceled some hearings a couple of weeks ago on that, and this, the FDA has been on the record saying this is in the White House's hands right now. So this is a political question. You've got sort of reports of, different factions in the Trump base and Trump world trying to, make one argument one way or another. This will come down to sort of, there's a smaller group, vape shop owners, who are very motivated and possibly might see this as a single issue voter kind of scenario. Whereas people that want Trump to do a ban see a much larger group, suburban voters, where Trump needs to do well, certainly maybe recover from 2018, which wasn't great for him among suburban voters, who might, see this action on this as a good thing, but might not always vote on it. And so that's really the tension here, is more motivated voters in a smaller group versus, a bigger group who might tune in.
Okay, Josh, thank you so much for joining us from the White House, covering everything from the White House to the Supreme Court to vaping. Coming up on Balance of Power continues on Bloomberg Radio. In our second hour, we're going to hear from Harvard Law professor Cass Sunstein on impeachment. Also ahead on Bloomberg Television Radio, Boston Fed President Eric Rosengren sits down with Bloomberg's Michael McKee from the Boston Fed. That's coming up at 2:30 this afternoon. This is Balance of Power on Bloomberg.